Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome to this podcast where we're going to examine how you can give knowledge to clients buying a business. The full title, of course, of our Accountant's Minute article was The Hidden Gaps in Business Buyers' Knowledge. One of the myths relating to small business is that someone who has been a senior executive in a larger organisation or even a government organisation will have no problems running a small business. I've never subscribed to that theory, and I thought I would tell you what confirmed my disagreement with that theory some years ago, because I consider it's a myth. I was approached by a gentleman who had purchased a retail store, a grocery store. And when he came and saw me, he indicated that he'd been the managing director of a public company. And he had moved out, sold his shares, and was now going to run a small business. I went through my normal presentation to a new business client and indicated the necessity for prompt, accurate financial accounts, and indicated that our firm could offer that service to him. We would sit down each month and analyse the figures. And he said to me, I don't really need any of that. I appreciate you bringing it up and discussing it with me. But I've been the managing director of a public company. I think I can handle a small business all right. And all I want you to do is the taxation return. And we might have a discussion, and you can charge me for that every couple of months. And I'll share with you my information, my figures, as to how the business is performing. I said, okay, let's get started. About 2 months later, I got a phone call very early one morning, and he said, can you come to my business as soon as possible? Right now, if you can do that. So an hour or so later, having changed a couple of appointments around, I went and saw him. I said, what's the problem? He said, I think someone's pinching money from me. I said, what made you think that? He said, well, we're very busy. We've got a lot of customers. He said, in fact, I'm told we got record numbers of customers. And my bank balance is going down. So I suspect that someone is pinching the money. He didn't know where. He just thought someone was pinching the money because his bank balance was going down and they were very busy. Not an unusual stance to take as a business operator, but I asked him a few more questions. And one of the questions was, how do you set your selling prices? And he said the delivery price of the goods plus the gross profit percentage. And I looked at him and I said, plus what? And he said the gross profit percentage. I said, show me what you're doing. And he produced a price and he had a chart. And I said, so that's your targeted gross profit percentage, is it? He said, yes, rather abruptly. And I said, well, you're doing it the wrong way. That's not the right calculation. Oh, don't be silly. Of course it's the right way to do it. I said, no, it's not. And he said, well, what is? I said, your landed costs plus your markup percentage. And he said, no, it's the gross profit percentage. I said, no, the gross profit percentage is the figure that's revealed at the end of the calculations. It's not what you put into your selling price calculation. That is your markup. I said, so what figure are you showing? And we went through that. And he said, well, my overall aim is a gross profit percentage of around 33 and a third percent. I said, well, you should be marking it up by 50% to achieve 33 and a third percent. And then I proceeded to explain to him. It took another 10 minutes, but then he looked at me and said, oh, I can see what you're talking about. I don't think I'm correct. And I said, I don't think anyone's stealing money from you either. You've just been mispricing. So how's business going? He said, we've got a lot of customers, record numbers. I said, no wonder. You're the cheapest grocer in this locality. Didn't any of your team members say anything to you? And at that moment, as it seemed, he got interrupted because there was a phone call. Someone wanted to talk to him urgently, one of the suppliers. So off he went. And after he walked away from me, a lady walked past to me and says, "G'day, Peter, how are you?" And I know her. And I said, "How long have you worked there?" Oh, she'd worked for the previous people for 10 years. I said, "You've been very busy." She said, "Yeah." I said, "Why?" She said, "He's underpricing." No wonder he's busy. I said, "Did anyone tell him that?" She said, "I told him, but he told me very clearly he was a former managing director of a public company." So I think there's a real moral in this. Somehow or other, we've got to be diplomatic with our clients. And at times we've got to say to them, well, just because you've been a senior executive in a public company or a government department or even a not-for-profit, some of them are quite big these days, doesn't necessarily mean that you are fully equipped to abreast all the single problems that you're going to confront in running a small business. I've got a chart in our product packages for ESS BIZTOOls, which lists about 40 different managerial roles in running a small business. Now, they're exactly the same in a larger business, but they've probably got maybe 10 people that those various responsibilities are allocated to. Yet in a small business, and in most definitely the one I'm describing now, this gentleman had assumed responsibility for virtually all of them, and he was getting proven out very early in the piece, thank goodness, that he didn't have all the skills. One skill he did have, though, is to know that something was wrong. So he rang for reinforcements, because he then said to me, well, I've been thinking while we've been talking, and in my previous life, and I'd been there since I left school and worked my way up. It was a family business, I had then found out. And there were two qualified accountants in the office, and they did all these sort of calculations. I'm a good marketer and entertainer, and that's my forte in business, not all this stuff. I said, well, we've got to change things, haven't we? He said, yeah, I've been thinking that too. Yeah, go back to your original proposal, please. We'll have monthly accounts. We'll have a meeting. We'll analyse the KPIs and everything else. We'll do everything like you suggested. So we did. So it disproved, a myth. The myth that just because people have had senior executive roles in other organisations does not necessarily mean that they are able to immediately walk in and overcome all sorts of problems in a small, medium enterprise. I'm not saying they don't overcome them given a bit of time. Many of them do, of course, because they've got very good skills and very good technical knowledge to help them. Success in business requires hands-on financial systems, not just big business experience. And advisors like you can play a crucial role in this. I know you've got to be diplomatic in explaining to someone that's had a senior position in a public company, in a not-for-profit, in a government organisation, that there is a learning curve in small business operations that they need to be familiar with. Within ESS BIZTOOls, we've got a complete package relating to all these things in buying a business to make sure that your client is better prepared and better organised to overcome the challenges. And some of these challenges were clearly identified in an article that appeared in the Financial Review in February 2024 that was written by Paul Robson, who was the CEO of MYOB. He explained that MYOB had conducted a survey of new subscribers to their package who were all people new to business. Unfortunately, he didn't tell us the background of those people, but based on the results, I don't think they'd had much experience in actually running a business before. They may have been senior executives in various organisations. Because what had happened is that he found at MYOB that these people were running out of money after 6 months of having started very enthusiastically about their careers in running a business. And this is very important for advisors like us to make sure that at the very beginning, when people are even looking at buying a business, they are aware of the true facts that relate to the business that they're going to acquire and the general circumstances in which they're buying a business. Now, the first point that Paul Robson highlighted was that apparently there'd have been an assumption on some of these people that if any person at the counter asked them for a credit sale, they were obliged to give someone credit facilities. I found that unbelievable. It's in their article. So we need to be saying to our clients who are looking at taking on a business, you don't have to give credit to everyone. There is a credit giving process. You should be ensuring that there is a credit management system installed. And if not, ESS BIZTOOls can supply it to you to install for the client. And there should be a credit application completed. And the credit application should be checked and referees should be contacted to make sure that your client is just not inheriting someone else's problem. Someone else that's discontinued the account to them, told them to go elsewhere. Their payment terms are up over 80 days and it's just not acceptable. A lot of these businesses didn't have a systematic approach to debt management. It was just something that got done when the bank account got down too low. Well, we better chase up the debtors. There was no compulsion for the preparation of debtor statements if they were still preparing debtor statements, but it didn't seem to worry them if it took 3 weeks after the end of the month to get debtor statements out. They should be out between 1 and 2 days. And I think they should be emailed, not mailed, so that there's some urgency given to them. And one of the other big things, of course, is the emphasising to a new customer that payments have to be made 30-day, if that's your client's trading term, 7 days, some businesses have, especially in the hospitality industries. 30 days normally in Australia. 30 days after the date of the tax invoice is the due date for payment, not 30 days after they receive a statement or some other figure that's calculated. There needs to be a follow-up process for overdue accounts. You know, the amount of debtors in the balance sheet should be the lowest possible figure, not a huge figure, because that's cash that the business probably badly needs. And that's what happened in this MYOB example, because there'd been an assumption made, they report, that all the people you gave credit to, the debtors, would pay on a 30-day basis. Well, unfortunately, we all know that that is not true. It'd be wonderful if it was true, but it's not true. Australia's got a horrendous debtors history. In fact, a few years ago, we got a very dubious international award. We were recognised by a worldwide organisation conducted by an organisation in London that Australia had the longest debtors days outstanding in the world. At the time, the then Australian Small Business Ombudsman, Kate Carnell, indicated this was a national disgrace And she was right. Now, since then, the previous Liberal government and then the current Labor government have introduced legislation to try to ensure that big businesses, and they define that as being companies with turnovers over $100 million per annum, would pay their SME suppliers on at least a 30-day basis. The penalty, though, is they will shame them in some way. And I've read a bit of material on this. They seem as if they've set up another government section with people in it who are going to police this. It'd be interesting to get your feedback, what your customers are saying, as how quick big businesses now paying them. Are they scared of being named by some sort of federal government organisation? I get the feeling some of them won't worry about that. So ignoring debtors' days outstanding can become a critical cash flow issue. And that's what happened in the MYOB survey. There was a lot of cash flow problems that were caused. One of the big issues then related to suppliers. And we're talking about advising people who are thinking about buying a business. So apparently these people who'd started off or bought or started off businesses had undertaken some research. They knew who the key suppliers would be, but they assumed that each of those suppliers would be that welcoming of their business that they would automatically give them 30-day payment terms. Unfortunately, it would appear they didn't contact those suppliers. And if they did, they didn't get it in the offer in writing, so they could at least have some follow-up processing they could do. The big end of town, the suppliers, and some of them are only other small businesses as well, aren't they, have had a very difficult period over the last 5 or 6 years. And some of them are very much aware of the high failure rate now occurring in small business in Australia. So they're wary. And if they were my client, I would have advised them to be wary of people coming in and saying they want to open accounts. They'd be putting people on cash or on 7-day terms and letting them stay on those terms for 3, 4, 6 months to let them prove their credentials before they give them a 30-day account. So the upshot of this was these people who'd started business started to run out of money because they'd assumed that everyone would pay them on a 30-day basis, their credit customers. They assumed that their suppliers would give them 30 days to pay, whereas a significant number of the suppliers were demanding cash up front or cash within 7 days. I don't know if an accountant helped them prepare their budgets and cash flow forecasts. I always tell people they should get budgets and cash flow forecasts before they start business. But something in me is saying I hope an accountant didn't prepare those, because I assumed as an accountant the question would have been raised, well, have you got confirmation that you've got 30 days to pay these suppliers? Or the other comment would have been, well, not many people get paid on a 30-day basis in Australia. And in fact, Australia's got an international reputation of having the longest debtors' days outstanding. So I don't think I'd be assuming 30-day payment terms from your credit customers. And perhaps they would have also been told by their accountant that they didn't automatically have to grant credit to anyone who asks for it. So that's some of the issues that confront people when they're looking at buying or even starting a business. So how do you give advice to someone that's coming to talk to you about buying a business? In ESS BIZTOOLS, we've got a complete package on buying a business. It's all prepared. You can badge the articles and send them to your client, the guidelines, the checklists, the the little stories like I'm telling you now, which is important because that can resonate then with that would-be SME operator. The story that a former managing director of a public company didn't know how to set a retail price. So no one should be assuming that based on their previous history, unless they've actually been running a successful small business, would understand all the problems. So some of the items that I think you should be asking them about, if they're going to take over a lease, have they reviewed the lease conditions? Because there can be some very painful lessons by not understanding what the lease says. At the end of a lease, there may be a requirement for full replacement back to its original condition. Has your client got history in the industry? Do they understand the industry? Every industry is different, and some are more complicated than others, and some can be a bit tricky. It might be difficult finding a complete summary of the do's and don'ts in that industry. How are they going to man the business? They're taking over a business. We're talking about buying a business. Have they made sure that they're going to be retaining the key employees? Have they got details of what they do, their job descriptions? Do they need further input? Has the vendor been involved in every aspect of the business? Has the vendor, in effect, got his or her finger in every different operation, or are there some very skilled team members in the business who can make decisions, who can run the business? Do they know anything about their competitors? It always amazes me when I talk to people planning to go into business. They really have no idea who their competitors are. We need to make sure that there's been some thought done to this, that a competitor SWOT analysis has been prepared, and sit down and play the devil's advocate with them. And the other big issue these days is to pose the question, what would happen if a major Australian-wide company was going to come to town? Have they made some inquiries? Are they going to end up with a Woolworths or a Coles or a new IGA or a Bunnings store being built in their location? What would that mean to their business? Do they understand how they set pricing? They definitely don't add gross profit percentage to the prime cost of the goods. Have they got a business plan? I think they should be sitting down with you. And quite frankly, if they're worried about what it's going to cost, I'd be telling them don't go into business, because if you haven't got a business plan, you haven't got a budget, there's a strong chance that you're not going to survive. And that was the story that really came out of the MYOB survey. And if they don't survive, you're probably going to be in their creditors list and you're not going to be paid either. So it's better to get all that sorted out up front. There is a cost to going into business. It's a cost for advice. And I think the advice should also extend, as it ultimately did, to the gentleman I described before, that he then commissioned us to, in effect, provide the monthly financial account service. We also set up a weekly performance and profitability report system for him, which is crucial for businesses to have, so that he had a very accurate indication each week, not just of his sales, but what the overall gross profit percentage was, calculated the correct way, which he could only achieve if he'd had the right markups factored in, so that he had a good indication of his bottom line, either profit or loss. This is part of the accounting service. And I think if you're talking to would-be new clients who don't want that service and who have definitely had no experience, I'd be declining the invitation to be their accountants, because all you're going to get is problems. The more I look at accounting, the more I get involved, the more convinced I am that we are here, or should be here, to supply a virtual chief financial officer service to our clients, because the failure rate in Australian small business is really highlighting that businesses are not getting the right answers. They're not analysing key performance indicators or business metrics. They're not looking in depth into the financial accounts. And if they're only receiving financial accounts at the end of a year, it's far too late. In fact, it's a waste of paper, other than producing something to submit to the tax office to pay tax on. That doesn't help anyone run a business. So it's vital that you're setting yourself up as being a trusted partner to your clients, because that's what you are in offering these services. Trusted partner, so that you can help them with these issues, so you can understand what's going on. You can meet with them every month to discuss the issues. Now you can use Zoom. You don't physically have to drive 30, 40, 50 miles, whatever it might be, kilometres, to sit down face-to-face, although it's very nice to have face-to-face meetings with your client a few times a year if you can. But you can use Zoom or some of the other similar products to have a discussion and to make sure that everyone is understanding where you're at. So we need our clients to be buying these businesses with a clear plan in place. This is the business plan. These are the budgets and the cash flow forecasts. This is the internal management system that's been installed, what we call the 52-week business enhancement system, which sets up a rhythm of meetings, daily, weekly, monthly, and a rhythm of activities, daily, weekly, monthly. Daily is basically a one-page brief report. What happened yesterday? Were there any problems yesterday? This is for the leadership team. Any problems yesterday? That's what we've got to try to fix first up. What's the amount of money in the bank? What's the payments that are going to get made this week? Who are the large debtors that haven't paid us that should have paid us? And that's going to the leadership team. That is their instruction, if you like, that they've got to get out and get that money collected so that the business can continue to trade. I think part of your role should be sitting down and continually looking at the cash flow 12 months in advance, based on what they're proposing to do, based on what's happening in their industry. Where's the basic raw materials if they're a manufacturer? Where are they coming from? If they're coming from overseas, somewhere in Europe, in the Middle East, or anywhere else in the world where there's wars or conflicts, is that going to slow down the supply chain? And does that mean that management will just be saying, well, we need to hold more stock? Well, holding more stock normally means you're going to pay out more payments, more cash to get that stock. So what's that going to do to the cash flow forecast? If your client's normally only holding 6 weeks supply of raw materials in Australia, and suddenly that's going to go to 12 weeks, that's a lot of extra money getting paid out. And what's the debtors balance look like? Was the budget done that the debtors balance would be 40 days, debtors days outstanding, and it's sitting at 62 days? What can be done to get that figure back to 40 days? Because that's just money sitting there. Is there a capital expenditure program, or does capital expenditures just occur when someone thinks about it? Looking at the funding. If it's a good business and it's going well, but they're wanting to grow, do they need to get some additional capital? They could do that by crowdsource funding, equity raising. Or if they're a very small business company and they've been involved in undertaking research and development activities, they've got a product concept, they can see where they're likely to go. Perhaps the early stage innovation company capital raising process would suit that. It's a unique program in Australia because the federal government pays an incentive to the investors. Yes. Do you understand that, how that works? They pay an incentive 20% of the investment. For a sophisticated investor, that percentage could be as high as $200,000, obviously calculated on $1 million investment. And if they're a retail investor, the maximum is $10,000 because the maximum investment is $50,000. But there's more. If they hold those shares that were allocated as part of the process to deem the company to be an early stage innovation company, if they hold those shares for longer than 12 months and less than 10 years, there's no capital gains tax. And that can be a very attractive proposition for an investor. You talk to your client about that so that they can plan where they're going down the track. So there's a lot of issues that can arise for someone starting a business. And I think it's good marketing from your point of view on your firm that you raise some of these issues, because they might be worrying the client, well, how are we going to grow the business? We've put all our money into this, and okay, we did think everyone would pay us in 30 days, and obviously if they're going to take 48 days to pay us, we've got to put more money into the business, or we haven't got that spare money in the business to do something else, which we were going to do. Talking about other objectives, putting those thoughts in the minds of the client, I think can be very important, because most people are not used to starting up and running a business. As accountants, we've hung around businesses for most of our careers, if you're in the public accounting sphere. But even a lot of our colleagues who have been in that atmosphere also have had some difficulties in going out and running businesses. I've seen some bad situations with a number of professionals who took over businesses and thought that was easy. They could play golf a couple of days a week or go sailing their boat around the sea a few afternoons a week, entertaining customers, and things were going wrong back in the business. I think we need to be putting in place a system and being an informed guide to your client. I know some of that's difficult. I was the chief financial officer and company secretary in a listed public company. So I dealt very closely with a chief executive officer who was a great guy, but sometimes would get a little bit cranky. I suppose we all get that. Some people tell me I get a little bit cranky these days. But at times, I had to be prepared to draw a line in the sand in giving him advice of what he wanted to do, which was spend a lot of money, millions on a particular project at one stage. And I just knew that we didn't have the cash flow advantage unless we went back to the share market and raised more capital. In a public company, that's always a prospect. But he didn't want to do that because that was then going to change the percentage control. So at times you've got to give the client some real hard advice, even in an SME business, to help them run their business more effectively. I think the difference between a business buyer's struggles and their success, that's the true value of a strategic partner. Your client does need this input. I don't think we should just be yes men or yes ladies when it comes to our SME clients. They're coming to you not for a tax return. In fact, if they're only coming for a tax return, I'd decline them. They should be coming to you for financial advice in running their business. And just as their GP at times gives them some blunt advice, I think also we have got to give some blunt advice to some of these people who are contemplating buying small businesses. And we should be prepared to make sure that they have got enough money, or they've got financial resources where they can get extra money from, because running a small business is not easy. So the call to action for you is, please look very closely at people who are talking to you about buying a business and make sure that they have done their calculations. But more importantly, I'd be suggesting to them that part of the arrangement with being a client of your firm is that you will be offering them an all-round accounting advice, and your estimate of cost is whatever it is, and that they should be factoring that into their business, because you will help keep them viable and save them from a lot of embarrassment. If you've got any questions on any aspect of the matters that I've discussed today in advising people on buying a business, please send me an email, peter@essbiztools.com.au, and I look forward to talking to you again when we discuss the issues that we have noticed when we're writing an Accountant's Minute article, trying to go in a little bit more deeply to give you food for thought and to help accountants and bookkeepers offer very viable and very valuable services to SMEs. Stay safe. Have a great day. Goodbye.